Well, welcome to another episode of Coffee with Samso. Today we're at Freddie Strudel's here in Northbridge. Suitably, our 50th episode, where we talk to companies in the mineral exploration industry, and CEOs to share their journey in the story. I've got Ed Turner back from Kingwest Resources here today, and Ed, it's been a while since we spoke, and I can see you guys have been doing a lot of work. Let us know what's been happening.
Yeah, okay. Well, since we last spoke earlier this year, we've been very busy drilling at Menzies, proving up resources and exploring for new resources. In just recent times, in the last month or so, we've drilled another 8,000 metres. The objective is to do infill resource definition drilling so we can convert inferred resources into indicated. That would lead into scoping studies early next year. But at the same time, we're doing step-out drilling, so deeper drilling and along strike drilling to try and grow those resources. So that's our main focus right now, and that will take us through to Christmas. We started off with a 10,000 metres plan for the resource definition. We've added another 4,000 metres to that because we're having some success, and then with 3,000 metres of exploration drilling on top of that. So that's quite a lot for the Menzies project. And then we've been planning some initial first pass drilling at the Goldfield project, which is 40 kilometres to the south.
Yep.
So that should kick off soon as well.
Yep. I mean, the Kingwest story is about the Menzies, the deeps, because Menzies is sort of known for being high grade, narrow vein kind of stuff. Yeah. Is that still consistent with your thinking?
Yeah, well, that is. We've got the high grade targets and deep targets. We've drilled down to 730 metres and still intersected 25 grams per tonne below the Undago workings. But at the same time, we've realised the value in the near surface resources. So that top 100 metres, in the last 12 months, we've grown that from 170,000 ounces to 320,000 ounces at 2.1 grams per tonne. That's using a 1 gram cut-off. So if we drop that cut-off, which is probably what would happen if you went into the mining stage, then that resource will grow again. So it's silly for us not to target those near-surface resources in the short term while the gold price is going so high, so strong. And then we can work towards getting those resources into production within the next 1 to 2 years. At the same time, keep on exploring those deeper high-grade targets. There's still a lot of high-grade within those the top 100 metres as well. We just announced, we've got 107 grams per tonne, for example, and the 3 metres 158 grams per tonne earlier this year. So they're not just at depth, but as far as finding another shoot, another high-grade shoot, that's a longer-term goal, basically, finding new shoots which haven't been mined previously.
Parallel shoots you're talking about?
It can be parallel, but they can be deeper down, on echelon, and there's still a lot of gaps in between the known deposits. So, we've got now 15 kilometres of strike length with the Menzies shear zone, basically, which is effectively a corridor 1 kilometre wide. So we've added another 5 kilometres of strike length to that with new tenements being granted a few months ago. And what's significant about those, which are north-west of Menzies, a lot of that's under transported overburden. So as you know, it's very difficult to explore through transported sand, wind-blown sand. So the old timers, the prospectors, couldn't find gold if it didn't reach the surface. So we've got a whole lot of prospective ground there, which we want to start exploring as well. And it's the same geology, same rock types. We can see the shear zones. We've got detailed aeromagnetics. We can see some structural controls. So that's upside as well. That's virgin country, basically. So that's another step. We'll get into that sometime soon when we can get a drill.
Yeah, well, that's another issue. But look, when we first started talking, Menzies and Kingwest, as I mentioned to you, I really at that time it was hypothetical in some sense and based on historical. I always like the fact that, in Menzies was something that no one's touched for a while, probably a couple of decades or more.
Yeah.
And you got very, very sort of strongly mineralized sort of vein loads and whatever you want to call them. But these kind of things in other projects similar style, they tend to go on forever in a sense. And when the mineralization forms, they tend to be very consistent as well. And like you said, you drill fairly deep and you're still getting consistent grades, and a bit like your Daisy Milano story where they just seems to be going for all the old Kalgoorlie mines, the super pits going for so long because it's consistent. Is that your feeling? You're feeling now?
Yeah, if you've got a big enough system, and Menzies is a big system. Like I mentioned, we've got 15 kilometres of strike length, but all of the historic production was from over about 10 kilometre strike length. So there's multiple shear zones, multiple loads within there. Often there's 2 or 3 in the same location. They can pinch and swell, but basically the mineralised structures are kilometres long, and within there you have high grade and low grade. So the old timers would mine all the high grade and left a lot of the low grade behind. And even in the 90s, with the gold price dropping off significantly, some of the geologists would have known there's still a lot of gold left behind, but they couldn't justify spending a large amount of money exploring for it. So we've drilled more than 20,000 metres in the last 12 months, and that's more than the previous 20 years combined. And we need to keep on drilling. We need to do another 8,000 metres this year, and next year there'll be more drilling. And the more you drill, the more you find. You have to know where the structures are first, the mineralised structures, and we know where most of them are. I'm sure there's some we don't know about yet. And it's like putting the jigsaw puzzle together. Every drilling program, we find more pieces of the puzzle, feed them into the puzzle, and we learn a lot every drilling program.
With the everyone knows that the industry is undergoing a boom not seen for many decades, and it's done well. But I think finally we're in a situation where the money is encouraging exploration, because suddenly there's optimism in exploration. In previous markets, it's always been the company trying to convince the money that, hey, you must give me this money because I can do this, I can do that. Whereas now I feel like it's the opposite. It's they're throwing money. Well, they're funding you well because they suddenly realize, hey, they're finding stuff, and for yourself, you're seeing all these intercepts, and it must be very encouraging for you guys to push your ideas forward.
Yeah, it is. I mean, we started off by testing concepts basically, and testing our geological models. And if you have a limited budget, then and you say you drill 3 or 4 bad holes in a row, and you don't have access to a lot of capital, then often the directors will go, well, we have to stop. It's too risky. Whereas we know now when we're on the mineralised structures, even if we get low grade, 3 or 4 or 5 holes in a row, the high grade can be 5 metres away. So that 107 grams we just announced, for example, was 8 metres away from a hole which had 3 grams per tonne. When we drilled the 3 gram per tonne hole, we knew it looked very, very good, so we're disappointed in the result. We went, right, let's try and twin that hole just to check the variability of the grade, and that proved the point. So the true average of the grade for that section of the lode is somewhere in between, probably. So you don't want to stop when you get false negatives. That's the nature of coarse gold. So often it underrepresents the true average, and then of course the high grades will overrepresent. So you need that density of drilling. You need the appropriate number of drill holes before you can really decide what you've got.
I think we talked about what I really wanted to get you to talk about today was the fact that just help us understand what your intercepts mean, because it's something different that a lot of new people in the industry don't have a full appreciation of. Firstly, if Menzies is this style of mineralisation, you're going to get those bonanza grades, but they're only going to be 1 metre or 2 metres, but they're very payable grades. Like your last announcement, like you said, 1 metre, 107 grams. Now, if you were in Wook and that's one of your drill holes, you must say, wow, that's a good intercept. Whereas here's almost, not say confirmation, but reaffirmation that you're on the right track. I just want you to sort of give the viewers an idea of what that means for you, Kingwest, and because of where you are.
Yeah, it does depend on if you're looking at open cut mining or underground mining. So underground mining, if you get 400 ounces per vertical metre, basically, so you need a certain length of economic mineralisation. You can mine down to 1 metre true thickness. So a lot of people worry about the thickness being too thin. But really, a metre at 5 grams per tonne can be economic grade underground if you get the appropriate strike length. So length times thickness times height times the grade. Plus 5 grams per tonne. Some people are mining lower grades than that underground if they have the greater thickness. So that makes up for the lower grade. From an open cut point of view, we're doing some internal modelling and we're just pushing the pits down to maybe 100 vertical metres. Then anything above about 1 gram per tonne average is potentially economic. It depends on the stripping ratio for the thickness. So we are seeing some greater thicknesses in that oxide nearer surface mineralisation. So instead of 2 or 3 metres, we've got up to 20 metres at plus 1 gram per tonne. So that helps de-risk the operation if you do have greater thicknesses. But basically, still a few metres at several grams per tonne can be economic. But you've got to calculate how much waste you've got to move to get that ore out. So once again, the greater strike length, like with the recent drilling we're doing, joining up Pericles and Lady Shenton, now suddenly we've got 600 metres of strike length. So that makes a big difference. And if we're mining 1 pit instead of 2 pits, then you mine a lot less waste as well. So that all works in your favour.
I guess all this, also the big factor is obviously the gold price and where it could head. I mean, that's a crystal ball sort of discussion in some ways, but and I think that's very important too, because that's why I've been telling people to maybe should look at companies and projects and how solid they are, because and in this market they can raise the money as opposed to say in the other, maybe a few years ago it was a struggle to do that, and now with that you can actually then go and make it work. I just did a coffee session with Scott Willison. I love that phrase. Good geology creates upsides that surprises you. So, well, the surprises are upsides as opposed to downsides, right? Because if you're in good geology, most of the times you're going to find positive news.
Yeah. You have to have confidence to back your interpretation of a new model and not stop too early. And we've got a lot of support from the market right now. We've raised enough money. We've got enough money for the next 12 months to keep drilling. And our board of directors are very supportive as well. So that helps. But also, when you talk about the economics of the operation, the location is critical. So because we're not out in the middle of Lubbock, we're on the highway. We've got power and water. We can look at commencing mining with a much smaller size resource and reserves because we can truck it to other mills in Toltree. So that makes a difference as well. If you have to build your own mill, then you're up for $100 million, for example, in capital expenditure before you get going. So we've got to factor all those things in, and when it comes time to do the scoping studies, we'll have to look at all the different scenarios for milling, basically, and production and timing.
From a market point of view, obviously everybody's sort of busy and everyone's getting lots of attention, and I've noticed of late you guys are getting a lot of attention in your share price. I think when we were doing the risk to talk even a month or 2 months ago was in the mid-teens or somewhere around there, and you're very buoyant now, and so is some of your neighbouring counterparts. What's the feedback you're getting from the market?
It's very positive. I mean, the more we get our story out there, the better the response is, and people understand. It's quite a well-educated market right now, and a lot of other gold companies are being, successful as well. So they're paying more attention, and our volumes of trades have gone up significantly in the last few months, and we have gone from 14, 15 cents up to say 22 cents in the last few months as we back up our story basically. We put out our strategy earlier this year, and we redid it a few months ago, and we're doing what we said we were going to do, and we're getting the results that we expected. So, and sometimes better than expected. So when people see that, then they have a lot more confidence to invest.
Mm-hmm. I mean, the gold market is doing well. I think most commodities are doing well. Let's touch on the topic that you mentioned before about, just the oncoming of the inability to get drill rigs to and let us. Can you give us an a view of that?
Yeah, that sort of changed almost overnight in the middle of the year, because we finished our last program in June, and while we're assessing all the results and planning the next round of drilling, and then we started to go and look for drillers and contract geologists and things like that. It was just it's gone crazy. Almost impossible to get the drill rigs that you want in the right time. So we're trying to find another one right now, for example, to just do some of those deeper holes, and it's very difficult. And the people have dried up. The border closures have impacted on the manpower significantly. I know the drilling companies have trouble finding people, but also we can't get geologists in from overseas or interstate. So that's had an impact as well. I'm not sure how long that's going to last, but it's a sign of the times, really. And the same with the assay labs. The turnaround of the assay labs has slowed up dramatically, and they're battling to keep up with all the demand. So it's a bit of a problem, but it's a good sign that the industry is really cranking along really flat out right now. So I don't want to complain about it.
No, never complain. It's I remember my very first job. We started in just summer coming on, and we were complaining about the heat, and some wise man said, "Don't complain because it will get worse."
Yes.
Look, in terms of Kingwest story, you guys are obviously drilling and everything else. And is there any sort of exploration that in terms of new areas, new tenements?
Yeah. So there's the extra 5 kilometres of tenements that I mentioned northwest from Menzies. So we'll do we'll be testing a few of the structures first as soon as we can get an air core rig up there soon. And then at Goongarrie, under Lake Goongarrie, I think there's potential for large deposits on that trend north of Aphrodite, which we have 18 kilometres of strike length there. We've got some 5,000 metres of air core planned to test numerous targets. We've got 9 targets identified currently, so we want to get in there and drill those areas. I think the way we see it is some of the biggest structures, which potentially can host the biggest deposits, appear to be under the lake. And it's only shallow lake sediments, but in the past it's been difficult for explorers to effectively drill under the lakes. But now there's track-mounted rigs which are specifically designed just to drill on salt lakes. So we're very excited about getting stuck into that in the next month or so, and try and get that done before Christmas as well.
It's interesting. I like that Salt Lake story, because obviously, you go into Sinai's and all this, big mines, all very sort of related to Salt Lakes. And previously, you as an explorer, you stayed away from the lakes because it's expensive, right? Whereas now money is, let's say, easier to find. I won't jinx it by saying anything else. Do you think that's encouraging people like yourself to chase those? Because I always tell people it's a lake because for a reason, right? There's structural issues, and that's why it's broken down faster and all this kind of geology 101 stuff. So do you think that's sort of encouraging people like yourself to chase those targets?
Yeah, definitely, because that's a sort of exploration program. It's the first one to be cut when there's not enough money around. So that's the higher risk end of the exploration story, basically.
Yep.
But the potential for those larger deposits is there, and you have to do a certain amount of effective exploration to test your concepts. But often there hasn't been enough money in the exploration budget to do that. So now's the time to do it.
Yeah. I think there's a lot of really highly potential hidden gems under these lake systems.
Yeah.
You only have to look around that Campbell area, and that's just proved to the pudding, you know.
Yeah.
Look, going forward, you know, what's the timeline that you see, you know, if you had to slot things in that?
Yeah, well, we want to get into updating our resource estimates as soon as possible. But currently, like with Pericles, for example, we're finding more and more mineralisation on the edges of that resource. So I don't know exactly when we'll finish drilling that, but as each of these deposits or resources we finish drilling, then we'll start to update the mineral resource estimates. So that'll be later this year going into next year, and then they'll feed into scoping studies where we'll look at all our we can actually, when we convert inferred resources, as you know, into indicated, then you can calculate reserves. You can't before. So most of our resources are still in inferred category, but with all that infill drilling, we'll convert most of them to indicated. Yeah, and then leading into scoping studies early next year, and then the feasibility studies follow on from the scoping studies, basically. So that's the focus right now, plus starting these grassroots exploration. We just talked about at Goongarry and north of Menzies. And then we'll be in a much better position to understand the possible economics of starting mining. We've got grounded mining leases already, so that helps a lot. So we'll save at least a year of time there to get all the permits in place to start mining. So.
You obviously recently did a raise, and so funding's not an issue for you guys. And as you go forward, I'm pretty sure status quo, the funding should not be as big an issue as in the past, your past life in an industry. What could throw a spanner in the works for the likes of Kingwest? Apart from the gold price tanking, which...
Yeah, I know the gold price would be the only thing I'm really worried about in the short term. There's no reason why we can't just keep on... You know, we haven't been affected by COVID, for example, here in WA, so we've been lucky there. That hasn't slowed us down at all. It's more just getting access to drill rigs and people that might slow us down, but they won't stop us. So, I can't think of anything which would stop us in our tracks. Yeah, especially since we are well funded, you know.
Yeah. And in terms of movement and stuff, you guys are still able to fly to Cal and drive up, and that's like
no
normal.
No problem.
Yeah. I think that's the lucky part of us. Look, you know, for views, you know, you feel free to send us comments, and I'm sure Ed wouldn't mind you guys sending direct emails or phone calls to the office to ask questions. I would encourage that, because I think it's a fantastic story. Look, it's a growing story, I should say, and I think from our first conversation to now, I'm happy to say that, you know, at least we're seeing what we thought we were going to see, and the consistency in this game is the real key. Look, Ed, you know, thank you again for your time. Anything else you want to throw at shareholders? You know, that 2 minutes buy my shares.
I think we've covered a lot of subjects in the last half an hour. It's a pleasure to talk again.
All right, thank you, and we'll have a strudel after this.
Yeah.
Thank you.